Hi, it is Thursday morning, 3rd of October. This channel is Drips Media, and I will be covering financial news from New York stock exchanges before markets open. The regular trading for the U.S. stock market opens at 9:30 a.m. My name is Daniela Drips. I will be quickly covering yesterday's closing data, main indexes, and the key companies. Please follow us online.
Good morning. This is Drips Media, lid from New York. Drips Media, the revolutionary digital service that transforms the way you stay informed. With Drips Media, you get real-time news delivered in dynamic short video clips, keeping you updated on the latest headlines as they happen. Our cutting-edge technology curates and condenses top stories. Whether you're on the go or just need a quick update, Drips News ensures you're always in the know, effortlessly. Stay connected, stay informed, and experience news like never before with Drips News.
Welcome back to Market Wrap. Let's dive into how the major indices fared yesterday. The Dow Jones Industrial Average closed at 42,196.5, marking a positive close for the day with a 0.1% gain. This upward movement halted a brief one-day dip, signaling a potential return to bullish sentiment. The S&P 500 also saw a positive close, albeit a marginal one, ending the day at 5,709.5. As 0.01% uptick was enough to reverse the previous day's losses, indicating a cautious but optimistic outlook from investors. Finally, the tech-heavy NASDAQ composite closed at 17,925.1, reflecting a 0.1% increase. Similar to the Dow and the SP, the NASDAQ also managed to reverse a one-day losing streak, suggesting a possible resurgence in tech stocks. Now, let's shift our focus to the tech giants, which had a mixed performance yesterday. Apple closed at $226.80, a 0.3% increase, effectively reversing a one-day losing streak. This positive movement could signal renewed investor confidence in the tech giant. On the other hand, Google faced headwinds, closing at $165.90, a 0.7% decline. This downturn snapped a four-day winning streak, suggesting a potential shift in investor sentiment. Microsoft also experienced a downturn, closing at $417.10, marking a 0.9% decrease. This is the second consecutive day of losses for the tech giant, potentially indicating growing concerns among investors. Amazon, however, presented a contrasting picture, closing at $152.10, a significant increase of 1.8%. This positive performance extends Amazon's winning streak to an impressive 5 days, highlighting the e-commerce giant's continued market dominance. Turning our attention to Tesla, the electric vehicle manufacturer closed at $261.10, a notable 1.2% gain. This positive close marks the end of a two-day losing streak, suggesting renewed investor confidence in Tesla's future prospects. Lastly, Meta Platforms, the parent company of Facebook, closed at $325.20, a slight increase of 0.2%. This marginal gain halts a two-day losing streak, indicating a potential stabilization in investor sentiment towards the social media giant. Now, let's delve into the performance of some other notable tech companies. Amazon continued its recent downward trend, closing at $184.80, a 0.2% decrease. This marks 6 consecutive days of losses for the e-commerce giant, signaling a potential shift in investor sentiment. Meta Platforms also experienced a downturn, closing at $572.80, a 0.6% decline. This negative close reverses 2 days of gains, suggesting a possible resurgence of investor concerns. However, Nvidia presented a contrasting picture, closing at $118.90, a solid 1.6% increase. This positive performance helped the chipmaker reverse the previous day's losses, indicating renewed investor confidence in its growth prospects. Netflix also saw a positive close, ending the day at $556.70, a 0.8% increase. This marks 2 consecutive days of gains for the streaming giant, potentially indicating renewed investor confidence. Lastly, Adobe closed at $821.40, a slight decrease of 0.1%. This marginal loss ends a 3-day winning streak, suggesting a potential stabilization in investor sentiment towards the software company. Shifting gears to the semiconductor industry, Nvidia continued its recent volatility, closing at $118.90, a 1.6% increase. Despite a volatile week, with 6 days of gains against 4 days of losses, Nvidia managed to reverse the previous day's losses, indicating continued investor interest in the chipmaker's growth prospects. Let's turn our attention to the financial sector, where we saw a mixed bag of results. Bank of America closed at $39.20, a marginal increase of 0.03%, reversing the previous day's losses. Similarly, JP Morgan ended the day at $207.30, a slight gain of 0.1%, also snapping a 1-day losing streak. These modest gains suggest a cautious but potentially optimistic outlook for the banking giants. In contrast, MasterCard faced headwinds, closing at $495.60, a 0.2% decline. This downturn halted a 5-day winning streak, potentially indicating a shift in investor sentiment. Visa also experienced a decline, closing at $277, a 0.2% decrease, reversing the previous day's gains. Meanwhile, Morgan Stanley presented a positive picture, closing at $104.50, a 0.1% increase. This marks 3 consecutive days of gains for the financial giant, suggesting sustained investor confidence. Goldman Sachs, on the other hand, closed at $331.70, reflecting a 0.3% decrease. This downturn ended a 3-day winning streak, potentially signaling a shift in investor sentiment. Turning our attention to Bank of America, the company closed at $39.20, a marginal increase of 0.03%. This slight uptick reversed the previous day's losses, suggesting a potential return to bullish sentiment. Despite the positive close, Bank of America's stock has experienced a slight decline of 0.05% over the past 5 days. However, zooming out to a month-to-date perspective, the stock is down 1.1%. Despite these recent dips, Bank of America boasts a significant year-to-date gain of 19%, highlighting its overall positive performance in the market. Looking back over the last 10 trading days, Bank of America has seen gains on 3 of those days. This recent performance suggests a cautious but potentially optimistic outlook for the banking giant. Now, let's take a look at the cryptocurrency market, which saw mixed results yesterday. Bitcoin closed at $61,325, a 0.8% increase, effectively reversing 3 days of losses. This positive movement could signal renewed investor confidence in the cryptocurrency market. However, Dogecoin faced headwinds, closing at 10 cents, a 1.2% decline. This downturn marks 4 consecutive days of losses, suggesting a potential shift in investor sentiment. Ethereum also experienced a downturn, closing at $2,397.80, a 2.1% decrease. This marks 5 consecutive days of losses for Ethereum, potentially indicating growing concerns among investors. Litecoin presented a contrasting picture, closing at $85.40, a solid 2.5% increase. This positive performance extends Litecoin's winning streak to an impressive 4 days, highlighting the cryptocurrency's recent market strength. Shifting our focus to the energy sector, ExxonMobil closed at $108.20, a slight decrease of 0.1%. This marginal loss ends a 3-day winning streak, suggesting a potential stabilization in investor sentiment towards the oil and gas giant. Chevron also experienced a downturn, closing at $165.40, a 0.5% decline. This negative close reverses 2 days of gains, suggesting a possible resurgence of investor concerns. However, NextEra Energy presented a contrasting picture, closing at $82.90, a solid 1.3% increase. This positive performance helped the renewable energy company reverse the previous day's losses, indicating renewed investor confidence in its growth prospects. Lastly, Duke Energy closed at $95.70, a slight increase of 0.2%. This marginal gain halts a 2-day losing streak, indicating a potential stabilization in investor sentiment towards the electric utility company. That concludes our market wrap for today. We've covered a lot of ground, from the performance of major indices to the ups and downs of individual stocks across various sectors. As always, remember that past performance is not indicative of future results, and it's crucial to conduct thorough research and consult with a financial advisor before making any investment decisions.